The broadcast is now starting. All attendees are in listen-only mode.
Hi, Sandy Vicani, Insurance Agency Marketing. Hope everyone is doing well. Wanted to say thank you so much for attending this academy this Friday morning. Just so greatly appreciate it. A couple house cleaning items that I'll go over before I hand this off to Gary Voith, great friend with Baltimore Life. So what we have right now is called an IAMS Business Builder. And what that is when you refer an agent over to us, you get a $50 check and for just referring that agent when they contract with us. And that's our way of just saying thank you so much for, want to make sure I show the screen. Thank you so much for referring that agent. When that same agent writes and places business with us, we give you 20 basis points on each piece of placed business thereafter. So whether that's life, annuity, MedSep, combination thereof, we'll send you a check every quarter for 20 basis points. For every agent that we have here, we have $100 of marketing reimbursement that we put into an account for every $100,000 of premium placed. And so what that is, think of it as like a business savings account. And we, again, every $100,000 of placed business, we'll put $100 in that account. That continues to build. It rolls over each year until you plan on using that. And then, you submit a business invoice, whether you purchased a laptop, webinar, seminar system, we pay up to 50% of that as long as that money is in your marketing reimbursement account. We also have something called a new producer builder. And so for any agent that's been contracted with us in your first 6 months, we have some levels of bonus production. So if you place $100,000 of business with us, whether that's life, MedSep, long-term care, combination thereof, you can choose a 2-year producer website or a $750 cash bonus. If you'd like to hold off because you think you're going to place $300,000 of business with us in your first 6 months, you can choose a $1,500 gift card, a $2,000 marketing reimbursement, so that we'll put $2,000 in that marketing account, or we'll put, you can choose a Social Security program and 3,000 piece mailing. Gosh, if you think I'm going to hold off, I'm going to go gangbusters here in my first 6 months and place a $500,000 of business with IAMS, you can choose a 4,000 piece mailing and seminar coaching with the top producer of ours, Dave Pimper, a 5,000 piece mailing and seminar coaching with another top producer of ours, Matt Gill, or you can choose my favorite, which is a Ritz-Carlton Travel Rewards Getaway where you plan your own destination. Again, this doesn't come out of anyone's commissions. This comes directly from IAMS as a big thank you, again, for entrusting your business with us. We also have strong back office support, whether that's starting you off on paperless contracting, so you get contracted and you fill out paperwork the first time, and then anything after that, we get that completed for you. We do your life and annuity quotes. We send you forms that are right there from our website. We help you with case design assistance and giving you specific tools and resources to help you close that case. And what's really important out of all of this is your submission to commission support. And what that is when you submit a piece of business to us, we scrub that application from head to toe, make sure nothing is missing. If anything is missing, we make sure to give you a call and let you know what that is. Get that submitted the very same day we get that we get that submitted to the carrier the same day, and we order any exams and labs that may be needed. We touch that case every 3 days to make sure that it's staying on track and issued and placed and out the door to get you paid as quickly as possible. We also have a strong creative marketing team, and gosh, if you have seen any of our life and annuity books, our newsletters, our website, the webinars here, our marketing team handles all that. Whether you're speaking with Sean or Jacob or Aaron in the marketing department, the creative marketing department, you're in great hands. They can customize different flyers and newsletters, postcards, if you don't have a logo design or you have one and it needs to be refreshed, you can, have them create that for you. A personal website, we can create and manage that. We can complete, again, online newsletters, social media marketing, which is really big right now. So if you're familiar with any of the Facebook advertisements and you wonder how you can get your agency's name out there, we can get that created for you to make sure to get as many people familiar with you as possible. Also, we have a great IAMS website. It is www.iamsinc.com. And on that website, you can pull up different term and UL quotes. You can pull up forms, industry links, current news. If you want to know the top 5 MIGA carriers on the annuity side, you're able to pull that up. You can pull up our current webinar schedule and look at any recorded webinars that we may have. If you'd like to shop around for E&O insurance, we have that for you as well. We have a link where you're able to get a quote there. And then also we have our sales resource library, which allows you to take a look at many educational videos, whether it's on Keyman, buy-sell, specific indexed annuity, pull any forms that you may need in regards to questionnaires. So it's a great site to be on. If you're not registered, gosh, I just strongly suggest that you get registered. I'm in this every day, so if you're calling up asking for a quote, this is exactly where I go. We have a wealth management division here at IAMS. We created that due to the DOL ruling that happened. So we were trying to think of how we can have our agents just capture as much revenue as possible without those clients going outside of you. And the wealth management division does just that. It helps you with managed money fees with recurring revenue. You're able to offer, a full range of different products and services. And then you're viewed differently by your clients. You're viewed as a fiduciary. If anyone thinks that DOL ruling has gone away, it has not. There's been many changes, and there will continue to be changes. So if you have questions, of course, please contact our wealth management division, and we would be happy to assist you. I'll send out a poll question here. Our Life and Annuity Academy is industry recognized. This is a 2-day training event. We are having one March 13th through the 15th in Dallas, Texas, and we're also having another one May 8th through the 10th. This 2-day training is an all-expense paid trip. We cover your airfare, your lodging, your meals. We go over different sales ideas and strategies from top producers. We unravel indexed annuities and income riders and go over different threats and trends. Turnkey seminar systems, it's possible to do coffee and cookies in a library to your more formal sit-down dinners, large life case marketing, single premium life. We go over infinite banking. We have agents all over the United States register. We have close to 1,000 register. We choose between 35 and 40. And again, we pay for everything. Lodging, airfare, meals. What a great opportunity to meet other agents from across the United States and go over different sales ideas, overcoming client objections. Real good opportunity there. By checking yes to this poll question, you're just asking for additional information, and we'll make sure to get that out for you. So in addition to carriers having just such great commission and their own incentives, we here at IAMS thought it was really important to have an incentive of our own for our agents and their guests. And so we have a 2019 Marketing Summit, and that is held at the Ritz-Carlton in Naples, Florida. That will be August 25th through the 29th of this year. We have long invitational periods. We want to make sure as many people get there as possible, and so we started that January 1st, 2018, and that goes all the way through June 30th, 2019. If you and a guest would like to attend, the only way you're able to attend is to make sure you are contracted and writing and placing business with us. And you can do that with a combination of $3 million of annuity premium, $1.5 million of MedSup, 2.25 of single premium life, 250,000 of life target premium, or $600,000 of long-term care premium. So again, we would love to have as many agents attend as possible. We have a lot of agents who are so very complimentary, say they feel like this is a great family reunion, which pushes them each year to attend. So what I'm going to do now is hand this over to Gary Voith. Gary and Baltimore Life, they are such great friends of IAMS. You can't be in better hands whether you're looking at, your single premium life, utilizing qualified funds or even non-qualified funds. So Gary, if you'd like to take over.
Well, thank you. Thank you, and good morning, everyone. And wow, that Ritz-Carlton, I was just at that property 2 weeks ago, and unbelievable location. Man, what a great trip for you and being part of all the leaders at IAMS. And again, great partners of ours. So thanks for joining us on a Friday. Today we're going to be talking about Baltimore Life's tax-efficient asset transfer program, which today we'll be talking about two products in our portfolio, our Generation Legacy and Single Premium Whole Life product. Both of these products are really designed with your senior clients in mind who have what we like to call some leave behind money. Money they don't need to live on, they simply want to leave it behind, thus creating a legacy for their family and doing it in a tax-efficient way. No matter whether you have funds coming from after-tax cash vehicles or from annuities or qualified funds, I think we have a product solution that's designed for you. So let's talk a little bit about the marketplace. It's huge. About $1 to $3 trillion in wealth is being transferred each and every year now between generations. And we know that about 55% of your clients' wealth is moving along to their family members. About 16% of that wealth is moving on to their favorite charities. So yes, 71% of your clients' wealth is moving to people and organizations they know and love. The question is, are they maximizing the amount of money they're able to pass along? And are they really doing it in the most tax-efficient way? The first product we'll talk about today is our Generation Legacy product. And this product is designed for you to help facilitate with your client the transfer of single premium funds not needed for daily living that are originating from either non-qualified deferred annuities or other qualified plan funds, 401ks, IRAs, 403bs, and the like. Obviously, the goal, increase the client's estate, do it tax efficiently through the use of life insurance. As we'll talk about, the issue age for this product is 60 through 80. And we have a unique approach here. With writing a single application, Baltimore Life will issue two products, a single premium immediate annuity that will receive the transfer of those funds that you're moving along to us, along with a limited premium payment whole life product. Once issued, both of these products will seamlessly be administered together by Baltimore Life to provide you with all the benefits that we'll be talking about here today. So one app issues two products, and then nothing for you or the client to do to find all the benefits we'll review. We have simplified underwriting through 4 tables we'll get into, as well as our accelerated death benefit rider. So what's another twist to the Generation Legacy product? A little over a year ago, we introduced a new option for Generation Legacy, and we call it the spouse option. And here's the scenario. You walk into a home, you have a married couple, and one of those spouses is insurable, and the other spouse is not insurable. But that spouse who's not really insurable under 4 tables does in fact have qualified funds that they're trying to distribute. Good chance they're going to have an earlier death than the healthy spouse. So they're looking for ways to move or reallocate those assets in annuities and qualified funds and move those along somewhere prior to their death. So what you can do with our spouse option for Generation Legacy is set the unhealthy spouse up as the annuitant that would be owning the SPIA, if you will, and the healthy spouse would own the life insurance. The key thing to remember, though, the whole goal of this two-product package is that you want to get that life product fully paid up in either 7 or 10 years. And of course, the money to supply that premium stream is coming from the SPIA. So in order to make this work, the annuitant, the unhealthy spouse, would waive the right for the beneficiary to commute the future SPIA payments at their death into a lump sum. It has to be used for the payments of the life insurance. But it really does create a great combination for a couple who has one healthy and one non-healthy spouse. So what about this qualified market? You know, there's about $2.7 trillion of in-force deferred annuities out there. About 65% of the money are in tax qualified or employer-based plans, and about 35% in non-qualified deferred annuities that you're probably selling a lot of. We know, and you know, that a significant share of especially those annuity dollars are being transferred to the next generation. People are using the great annuity product to accumulate assets in a tax favorable way, but the problem is many of them have no plans of ever using it for income. So they're simply transferring that money to the next generation. We also know that with qualified funds, you do have a required minimum distribution at age 70.5. And of course, at death, if you haven't distributed all your funds, of course, you know, they're simply going to be passing the tax along on that gain to the survivor that will more than likely be in a higher tax bracket than the person that had that annuity contract. So we know that annuities are great contracts, products, absolutely fantastic. We sell a lot of them, you sell a lot of them. But the question is, are they really the best products to die with if you have a better alternative to pass along wealth in a greater and in a more efficient way? Well, let's think of generation legacy as a gift your client's trying to pass along to the next generation. And inside that gift box, you're going to help facilitate the transfer of funds from, again, annuities or qualified plans. With writing a single application, as I mentioned, we'll issue two products, a SPIA and a limited premium payment whole life product. Now, over a period of either 7 or 10 years, that SPIA will automatically make annual premium payments to the life product. Nothing for the agent to do, nothing for the client to do to make that happen. So what dictates the payment pattern? It's the age of issue. For clients issued at ages 60 to 74, we'll issue a 10-year payout on the SPIA along with the 10-year limited premium payment whole life product. For someone that's 75 to 80, a 7-year payout on the SPIA along with the 7-year paid-up life product. Now, here's where the benefits really get rich, and that is, what if the client were to die during the period of time when the SPIA is being used to fund the life insurance? Well, we know that at death, the life insurance benefit will always pay out an income tax-free death benefit greater than the single premium paid. But if you have one annuitant and one insured, not the spouse option, one annuitant and one insured, the remaining payments from the SPIA at an early death would also be paid to the named beneficiary. So that's a big, big plus, isn't it? That they're not only getting the life insurance income tax-free, but the remaining payments from the SPIA. Of course, with the spouse option, if this unhealthy spouse who was set up with the SPIA dies, those remaining payments from the SPIA would be used to pay up the life insurance. So at the end of the 7 or 10-year period, the life product now is fully paid up. It continues to provide income tax-free death benefits that are greater than the single premium paid, continues to provide cash value growth on a tax-deferred basis, and yes, continues to provide the accelerated death benefit riders we'll talk about. So again, just to recap, issue ages are 60 to 80. We do base our pricing on current age or age at last birthday. Now, the reason this is important is that you're going to be dealing with the transfer of funds from other products and carriers and institutions. That transfer process may take 20 to 35 days, and we're going to issue the policy based on your client's age the day we receive the funds. Very important to know. Minimum premium to get this started is only $5,000. How many clients do you have out there that have multiple annuities maturing over various spans of time, but you know that a large majority of those annuities are simply going to be used as a way to push money to the next generation, not as income. Great way, great opportunity to sell generation legacy. The average premium, by the way, though, we see on this product is about $60,000 to $65,000. Now, the maximum face amount based on the single premium paid for the whole life product issued is up to $450,000. We have two underwriting classes, non-tobacco and tobacco, and within those underwriting classes, we'll issue any risk on a simplified basis, standard through table 4. So that blended rate for simplified underwriting, male and female, non-tobacco and tobacco. Cash values, they accumulate in the life product on a non-participating basis. Partial surrenders, they are permitted from the life product after the life product has become fully paid up. Of course, that's 7 or 10 years. Loans are available at any time from the available cash value at a maximum rate of 8%. So now let's talk about that accelerated death benefit rider. Truly can provide living benefits to your client at a time when it's needed most. Certainly it should never be sold as a long-term care contract or anything close, because we know that long-term care policies are the best solution for true long-term care needs. But we also know truly that most seniors can't afford long-term care insurance. So isn't it nice to know that you could accelerate life insurance benefits to provide living benefits in certain situations? The 3 health event triggers that we provide that you can accelerate or trigger that rider is terminal illness, confinement to a qualified nursing home facility, and in situations of extended care, home health care, and adult daycare. This truly can accelerate the life insurance benefit that you have there, and it's available upon issue. So, as soon as the policy is issued, this rider can kick in as needed. Once an acceleration is, engaged and utilized, a lien for the amount of money that was taken or accelerated will accumulate prior to death at an annual rate of 8%. We'll show you how that lien approach works in just a moment. The maximum that you can accelerate is $250,000. The minimum is only $5,000. But here's the good news. This benefit is paid out once. It's paid out in a lump sum, and these are unrestricted funds. The monies can be used for whatever reason that client deemed necessary. So now let's take a look at those triggers and what the definitions are and the maximum percentages of payout. First is terminal illness. Under that rider, the client needs to be diagnosed as terminally ill with a life expectancy of 12 months or less. And here, the maximum accelerated rate is 75% of the face. The second rider covers both qualified nursing and extended care situations. For qualified nursing, they need to be diagnosed as chronically ill, confined to a nursing home, a qualified nursing home, continuously for 90 days, but with the expectation of a permanent confinement. For the extended care situations, they must be chronically ill, have been so for 90 days, but now they're requiring care provided either by a licensed home health care agency or a licensed or state-certified adult daycare center. In either nursing home confinement or extended care situations, up to 50% of the life insurance benefit can be accelerated. Now keep in mind, 75 to 50% of the maximum rates. We do have about 6 or 7 states in the country that have lower percentages, and that information can be found on our state approval chart. Examples, states of Pennsylvania and Indiana. They have a 65-40 payout rate instead of 75 and 50. So the riders are intended to be able to provide cash now, but always provide remaining life insurance benefits in almost every situation for the beneficiary. What do we mean by chronic illness? If the client satisfies either of these definitions, we consider them to be chronically ill. The first is they can't perform 2 out of 6 activities of daily living. Maybe they're okay on their ADLs, but they could be suffering from a severe organic mental illness, such as Alzheimer's or dementia. In either case, we consider them to be chronically ill. So let's take a look at some examples of how these payouts work. This is a client that's got $100,000 face amount of life on the life policy. We're going to say they're terminal, so they can accelerate 75% of that amount. So they get a cash payout as a living benefit of $75,000, and the lien is established by taking the $75,000 plus a $100 service fee for the transaction. So it's $75,100. If they were to die immediately after getting that payment, no time for interest to accrue on the lien, the death benefit would be calculated by taking the face amount of $100,000 less the original lien, giving you a remaining life insurance benefit of $24,900. But the more likely scenario is this one. That's where they die 1 year after taking the benefit. So they still got their $75,000 as a living benefit, but at death 1 year later, the death benefit is calculated by taking the face amount less the original lien minus 1 year's worth of interest, giving you a remaining life insurance benefit of $18,892. So in this scenario, this client would have to live in a terminal condition 4+ years for the interest to outrun the remaining death benefit. Pretty unlikely that's going to happen, but there's always that possibility, and we'll talk about that possibility in a moment. So could these riders be terminated from, at all in any situation? Well, technically they could. Technically, because you're working with 2 contracts that are administered as one, You could say the life policy, there's a chance it could end. And how could that happen? Especially if the SPIA is automatically paying for it. Well, if the insured gave you $100,000 in year one and a 10-year payment plan and said after year two, hey, I didn't think I'd need that money, but now I do. I need as much back as possible. You would technically be able to sever the two contract scenario and cash out. You would cash out the life policy that would have very little cash value. Of course, when you cash out of that, you have no more accelerated death benefit rider, and the remaining payments from the SPIA would be paid out to that policy owner. So if death occurs, we don't pay an accelerated benefit, we pay a life insurance benefit. And if we accelerate, let's say under the nursing home provision at 50%, you can only accelerate once. You can't come back later and say, well, now I'm terminal, let's get the other 25% of that amount. No, it's a one-time deal, and that's it. The rider is finished. Now, the other scenario is one I painted. What if the client who's terminal and lives 4+ years? Well, technically, the interest could, in that scenario, outrun the remaining life insurance benefit. In that scenario, the owner may repay all or part of the lien at any time to keep this qualified as a life product. Keep in mind that the life policy, even though you accelerate, still has a cash value that's accumulating tax deferred. And if you're going to accelerate on this rider, you cannot have an active policy loan. You can't have a loan and a lien going on at the same time. The last thing to tell you is that no matter whether you're accelerating under our contract and rider or any company's rider that's similar, you must tell your client they should be consulting with a tax advisor. So let's quickly look at an example here. Here's a 70-year-old female, non-tobacco, who's got, let's say, $50,000 coming from an annuity. With that $50,000 of leave behind money, we issue a life policy for her for $78,000, nearly $451. So she's increased her estate at issue by $28,000, nearly $451. Keeping in mind that if she dies in the first 10 years, the remaining payments from the SPIA would also be paid. But look at these accelerated payments that could be made from the rider. I mean, this is real cash to a senior at end of life that, is looking, maybe doesn't have long-term care insurance and probably doesn't. And this is real cash for them. They could use for any reason they deem necessary. Again, unrestricted funds, one-time payment. So what's another tax efficiency or advantage of this product? We feel as though it's how we deal with the transfer of funds to be used as premium payments. Eventually Uncle Sam's going to be paid tax on gain for qualified monies that are coming over, but it's how you do it that's important. So if you're rolling money from an annuity where there's a basis and a gain, or you're rolling money from an IRA where it's all gain, eventually tax is going to be paid. But if you're rolling money, let's say from an IRA that none of it's been taxed before, and it rolls into a qualified SPIA that's going to pay for a life insurance product, we're able to spread that tax out on the gain over a 10 or 7-year period for the owner of the policy. So as a result, they will get a 1099 on the taxable portion of the funds that are being transferred into the SPIA and used for a life insurance payment. They'll get a 1099 each year, so the tax is able to be spread out. That's a good thing. The other thing to remember is that SPIA payment that we make to the life insurance product does satisfy the calculation for the RMD rules at 70.5. The last thing to remember is that we know the life insurance is paid out income tax free, but the remaining payments from the SPIA, those payments would be taxable based on the portion of the funds that have not been taxed before, of course, to the beneficiary receiving it. So if it all came from IRA money, each of those payments would be taxable. If it's coming from an annuity, the gain portion of that annuity would be taxable. Now, the default method that we pay out those remaining payments of the SPIA to the beneficiary are annual payments. So 2 years have been paid on a 10-year payment plan, 8 more years of payments would be paid out. But if the beneficiary says, you know what, I want a lesser commuted lump sum, we can do that as well. In either case, they'll get a 1099 based on the taxable distribution. One more thing to mention about the tax portion of this plan or tax considerations is the application. Because we're dealing with the transfer of annuities and qualified funds, we have to ask the question, do you want a withholding on the money that you're rolling over, withholding of tax? And we have to ask the question, but we cannot act on that request. So please make sure that you check the box that you do not want tax withheld from the annuity you're rolling over. Otherwise, we have to send everything back to you, because the way the product has been designed, it needs every dollar in order to make this work based on the calculations we've set up. So now let's take a look at premiums to death benefits. I want you to start thinking about some of those clients you have out there, let's say annuity clients, who are perfect for this type of product. They don't have reason for income. They just want to pass it along. Here's the 65-year-old non-tobacco user who has 50 grand, let's say coming from an annuity. And because they're 65, we'll issue a 10-year payout on the SPIA along with the 10-year paid-up life product. For the male, the face amount would be $77,361 and change. And for the female, the face amount is $87,031 and change. So what did you just do for this female 65 who just wants to pass the money along? You've increased her estate by over $37,000 at issue. Keeping in mind, if she dies in the first 10 years, the remaining payments from the SPIA are also paid. Now, she may say to you, Sandy, what if I'm in a 25% marginal tax bracket and I'm making 3% on the money? Wouldn't I be better off leaving it where I've got it? Well, it would take over 19 years just to accumulate the $87,000 that would be paid out from the life insurance, keeping in mind that that life insurance benefit is there to be paid income tax free. Here's the 75-year-old, little older, shorter life expectancy. Numbers still look pretty primo. At 50 grand going in, because this client's 75, we'll issue a 7-year payout on the SPIA, along with the 7-year paid-up life product. For the male, the face amount, $61,516 and change. And for the female, the face amount just over $67,000. So even at 75, you're increasing this lady's estate by over 17 grand. The gentleman's estate by nearly $12,000, and knowing that if they tie in the first 7 years, the remaining payments from the SPIA are also to be paid. I tell you, you know, I'm a licensed agent myself. I've been marketing this product for Baltimore Life for many years, and clients absolutely love it. Once they get the concept and they see their numbers, it really works well. Not only do you make sales, but I would tell you, you need to be asking for referrals early and often, because quite frankly, they do talk to their friends and family, and you'll make other sales if you're asking for referrals early and often. Now here's a ledger of Generation Legacy, and this is a screenshot of part of the proposal software that you can generate with on our website. This is a non-illustrated product, so no signed illustrations are needed, but you can generate some very nice proposals with the policy or the product description and a nice ledger. You can also generate this ledger look right on your phone using our Mobile Link app, and I'll talk about Mobile Link in a moment. So here's a female 70, non-tobacco, who let's say had 50 grand in an annuity with a cost basis. Her money is $40,000. You see there in column 3, the 50 grand going in year 1, and from that payment, about $5,570 would be made as a premium payment from the SPIA to pay for the life insurance product. Out of that $5,570, nearly $4,000 of it is excluded from tax. That was part of her basis. But based on an interest factor over 10 years, the estimated taxable income is about $1,571. That's what she would get the 1099 on each year. And it's so important that the insured understands that idea they're going to get a 1099 on this. Whole life death benefit over $78,000, and the commuted lump sum of the SPIA payout is shown there in the next to last column. So once the client, you know, you've done a good fact find, you found the money, you found the intent of the money, you've done a presentation on the concept of asset transfer, and I'll show you a tool for that, then you can show a proposal like this to really bring home what it looks like for them, and of course close the deal and get that application and get things started. So what about applications and forms? We have, trying to make this pretty simple for you, on our agent website, we have product toolkits set up for every product that you're contracted for with us. And in that toolkit, you really find everything you need to sell and market our products, including our printable application and forms package. You answer a couple of quick questions, it'll automatically generate you the forms you need. In that situation, you can print the forms, save them as PDFs, email them, whatever you need to do. The other thing that will come with the forms package is a set of instructions telling you how to get the apps to us that you're going to complete using our secure file uploader process. And also, you will get a set of instructions on completing our point of sale underwriting interview. That's where as soon as you write the app, you can call our call center, do a 12-minute interview with your client, and get an underwriting decision right there, point of sale, nearly every time, and very few exceptions. We'll talk about that in a moment. In the product toolkit, you'll find a number of other things. We'll talk about some of these things later. We have our agent guides, our proposal software, fact finders, point of sale presentations, letters, phone approaches, just a number of tools. And I'll show you a few of these in a moment. So now let's talk about the second product. That's Secure Solutions, our single premium whole life product. Same concept. Client wants to increase their estate value, leave a legacy for their family, but several differences with single premium whole life. The first of which is the source of funds. This product is going to allow you to put in single premium dollars not needed for living from after-tax cash vehicles, CDs, money markets, mutual funds, and where appropriate, 1035 life-to-life product exchanges. The issue age, 50 to 85, a little broader issue age because you're working with after-tax cash dollars. We have simplified underwriting on this product through 8 tables we'll talk about, as well as our accelerated death benefit rider, which has a couple wrinkles to it that gives you some more flexible ways to extract the money. So the issue age is 50 to 85 based on current age or age at last birthday. 2 tiers of underwriting. So you either get non-tobacco or tobacco, male, female rates, and you either go level 1, which is standard through table 4, just like you have for Generation Legacy, or a second level, table 5 through table 8. So a client with a few more challenging health conditions would qualify. Minimum premium, only $5,000. How many clients do you have out there that you do fact finds on, or you have already done fact finds that have multiple CDs, let's say, sitting in the bank? You know, here's the money set aside for each of my kids, my grandkids, my favorite charity, that my kids know that's the money that's set aside and compartmentalized when I die and where it's to go. What about this scenario? How about an agent who's trying to sell small face amounts of life insurance to cover final expenses? And a client says to you, well, you know, I really don't need any life insurance. I have a burial account set up. Well, that means one of 2 things probably to me. It means they either have a prearrangement at their local funeral home, or they have a CD sitting at their local bank with money that the kids know that's the money set aside to bury mom and dad. Well, here's a scenario role play for a 70-year-old. They got, let's say, $15,000 set up in a CD at age 70. Mrs. Jones, you know, I know you have this set up for your burial costs, but what if I was able to show you a way to take that $15,000 and provide your family with nearly a $25,000 income tax-free death benefit? Oh, by the way, if you became terminal in a nursing home or an extended care situation, we could get at some of that money for you, that face amount of the life insurance for you in cash as a living benefit, and still set it up that you have some life insurance benefit when you die for your family. Does that sound like something that would work more efficiently for you? And that's called the burial account concept, and I can't tell you how many agents get started selling single premium in this way, and once they figure out how to do good fact finding, sell bigger and bigger premiums. The average premium we see, by the way, on this product is about $30,000 to $35,000. The maximum face amount for single premium whole life is expressed in terms of the maximum net amount at risk. That's really just the difference between the face amount that we issue and the single premium paid. That gap is the net amount at risk. Cash values, they accumulate again on a non-participating basis, but here's another difference. Partial surrenders, they're permitted, you know, after the first policy year within limits. So starting in the second year, you can take a 10% partial withdrawal, third year 20%, fourth year 30%, fifth year 40%, and in the 6th year and thereafter, 100% of the available cash value can be taken as a partial withdrawal. Loans, of course, are always available. 3 health event triggers for the accelerated death benefit rider, the same 3 I gave you for Generation Legacy: terminal illness, qualified nursing, extended care, home health care, and adult daycare. You can accelerate this benefit anytime after issue. The benefit is paid out in a lump sum, and again, these are unrestricted funds. The flexibility I refer to is this. You can elect to either do a full acceleration within limits or a partial acceleration, leaving a certain amount of paid up life insurance and then take the other amount in cash. So let's talk about how that works. Here's terminal illness situation, same definition to qualify, 12 months or less to live. But if the client wants to do a full acceleration, they can take 95% of the face amount less a $250 admin charge. Now, if you've never used accelerated benefit riders before, you might say, what happened to the 5%? Well, anytime a company accelerates a life insurance benefit, they've got to have a certain amount of holdback because we're paying out a benefit in advance of when the expected death would be. So they either do it through this method that I'm showing you or the Lien approach that I showed you for Generation Legacy. So they could do a full acceleration at 95% less the admin charge, or say, I have $100,000 in face, I'll keep $25,000 as a paid up life policy and accelerate the other $75,000 in face at this 95% less the admin charge. So that's the difference between a full and partial acceleration. If you're doing a nursing home confinement situation and accelerated benefit, the rate is at 90% less the admin charge. And for the extended care, home health care, and adult daycare, because the clients can live longer yet, the maximum percentage is at 80% less the $250 charge. Same definition for chronic illness, 2 out of 6 activities of daily living, or a client suffering from a severe organic mental illness. In either case, we consider them to be chronically ill. So here's some premiums to death benefits. Here's 65-year-old male putting 50 grand in. For the male, the face amount would be at level 1 underwriting, a death benefit of just short of $82,000. For the female, the death benefit is just short of $93,000. But let's not forget, for this product, you have a second level of underwriting. And what you're going to find at all ages and genders, the difference between level 1 and level 2 underwriting is about $5,000 to $6,000 less. Not a bad reduction considering you have that extra tier to work with. So what did you just do for the female 65? You increased her estate value at issue by nearly $43,000 on money she's probably got sitting at the bank, making next to nothing in interest and getting a 1099 on each year. As a matter of fact, if she were in a 25% tax bracket, making 3% on her money, it would take her 28 years just to accumulate that extra $43,000 you've increased her estate by, knowing that the life insurance benefit is almost $93,000 income tax free. Here's the 70-year-old, shorter life expectancy numbers still look good. For the male, the face amount is just coming up on $74,000, and for the female, the face amount is just over $82,000. Again, with that second tier of underwriting, the face amount reduction is about $5,000 to $6,000 less. Same story on the app package. You know, go there, get all your forms you need, and we have great marketing tools in our product toolkit. So let's talk about what I think is really important, what you're really going to like, and that's our point of sale underwriting. Once you complete the app, you pick up the phone, you complete about a 12-minute interview with our call center and your client. We're going to be asking your client the same questions that you completed on the paper app you're going to submit, but the difference is we'll get the permission from your client to get the data we need to look at the MIB and the prescription drug database. If there's any conflict in what we're seeing in that database with the app, we get it clarified and make an underwriting decision. After the client has completed the interview, any underwriting decision isn't communicated to the client. It's going to be communicated to you. You'll be the one communicating it to the client. We'll also give you a confirmation number that we ask you to write on the app for that interview. Now, once the appointment's done, please make sure you send us all the paperwork. We need that no matter what the underwriting decision. And again, all this information on how to complete this call is out in the app package. It'll print with your forms. The phone number is 888-368-9678. The hours are 9 a.m. to 10:30 p.m. Monday through Thursday, as well as 9 a.m. to 6 p.m. on Fridays. These are Eastern times. And we do support English and Spanish languages. Other languages are available upon request. And if you have a hearing impaired client, we have TTY services in both English and Spanish. Please keep in mind the interview must be completed within 5 days of completing the app. You might say to yourself, well, what if I'm doing an app on a Saturday or after hours? What do I do? Not a problem. Pick up the phone when you finish your meeting. call us at the call center, and when prompted with the voice message, leave your name and number, your client's name and number, and a date and time you want us to call them. We'll call your client at that time, get the interview done, and again, call you back with the underwriting decision. You're the one that's going to communicate it to the client. How do you pre-qualify your applications? Quick rules, couple easy rules on this one. We have an app for each product, and the reason we do is that for Generation Legacy, we have one tier of underwriting. So we have one section of medical questions, a Part A. Think of the Part A questions as knockouts. If you get a yes in Part A, it means you don't qualify through 4 tables. But if you're all no in Part A with good height and weight, MIB, and drug history, we're going to issue Generation Legacy. For single premium whole life, we have 2 tiers of underwriting, so there's a Part A and a Part B. Think of Part A as your knockouts. If you get a yes in Part A, it means your client is not going to qualify through 8 tables of underwriting. But if you're all no in Part A and Part B, everything else looks good, we're going to issue Tier 1. And if you're all no in Part A with 1 yes in Part B, with everything else looking good, we'll issue that Tier or Level 2. So with that, I'm going to use the remaining time to show you a couple of quick marketing pieces here. And this happens to be, bring that up, this happens to be our agent website, at least a screenshot of it. At the top of the screen, you're going to see a number of colored boxes. Those are the product toolkits. Inside those product toolkits, this is what one looks like. You'll find really everything you need to sell and market with us, the app package and all the other good stuff. So let me talk about a few of these things quickly in the time we have. The first one is, I think, the most important thing I'll talk to you about, and that's Mobile Link. Mobile Link is how you can write on your smartphone, smart tablet, anything connected, basically have an interactive agent guide in the palm of your hand. Simply go to mobile.boltlife.com. You can do that now, and you know, this isn't something you have to be contracted yet or anything else. Mobile.boltlife.com. Once you're there, save that site address to your phone as a link. It'll give you a nice little shortcut that now you launch it like you would any other app. This isn't a downloadable app. This is a website that you're saving as a link or a shortcut. On Mobile Link, you will find the product information, the underwriting guidelines, and again, a rate and value calculator. You can even create that ledger that I showed you for Generation Legacy, as well as the necessary information you'll need to sell single premium whole life. Keep in mind, these are non-illustrated products, so really you'll have everything in the palm of your hand to close the deal. Point of sale presentations. We have great point of sale presentations, you know, and I'm flicking through these, not going through it in detail with you, but you're going to do fact finds, hopefully, and then also present the concept of asset transfer. This happens to be one of those presentations where it explains the concept of asset transfer, features and benefits of the solution, and then we use with Generation Legacy that gift box concept to drive the message how 2 products can work together as one. We go over the impact it can make on someone's estate value with a single premium. We get into the accelerated death benefit riders. So all that is right there for you. And this can all be downloaded from our product toolkit. We have great fact-finding forms out there for you because, of course, fact-finding is so important to be successful in this market. You can collect the client's current assets available for daily living, are not needed for daily living, from CDs, money markets, mutual funds. You can illustrate in that center section, if you take a portion of those funds and put it into the appropriate product, the impact that it'll make on their estate value. The bottom of the form allows you to collect their current monthly income, so you know you have enough money there now and going forward. And the top of the form gives you those key dialoguing questions, something like, you know, Mrs. Jones, do you have money that you would like to leave behind for your family or favorite charities that's really not needed for your daily living? And most people get the leave behind money concept, and if they don't, it's going to create a great conversation. This page really highlights another document we have on the site, and it's called Single Premium Sales Ideas. Each of these are explained in detail, and I've gone over, I think, most of these with you in the presentation today. But take a quick look at that. You'll find it to be very helpful and help you generate a prospect list of people to go out and see. We have these customizable marketing flyers where you can explain the concept of asset transfer, the features and benefits of the solution, and then you can fill your personal contact information right on it and print as many as you need. Great forms, and we have many varieties of these. We have this nice Excel file calculator for comparing single premium whole life to CDs. You plug in the amount you're working with, the estimated rate of return the CD's getting, and also the tax rate. It'll generate numbers for you and really show pretty vividly to the client why they're might be so much better off with the single premium product than putting money in a bank and getting after-tax return. We have white papers. We have third-party articles. Again, all this can be found out on our agent site in our product toolkit. So, Sandy, one last plug that I want to make here is for our agent trip. And wow, do we have a doozy coming up in 2020. So July 12th through July 16th in 2020, we're going to be in Dublin, Ireland. A fantastic conference. It's you and a guest, all expenses paid for our qualifiers. We're all about fun, not business in these trips. So you're just going to have a great time with your guest, significant other. All it takes to qualify with this product, our single premium products, is $750,000 in premium. That converts to our $75,000 of net conference credits. And I know it takes a lot more for you probably to qualify in other places for these kind of trips. But, you know, chances are if you qualify for our trip, you would have already qualified for the trip with IAMS as well. So 2 for 1 isn't bad to have some nice paid vacations for you and your guests. So with that, I want to thank everyone for participating today. Hopefully you were able to keep up with my fast East Coast kind of talk because we only have so much time, and I want to thank everyone for participating and certainly thank IAMS for the great partnership we have and being one of our leaders. So, Sandy, it's back to you.
Yeah, I appreciate it. Let's go to questions, and I'll do one last poll question, and that's if you'd like to get contracted with Baltimore Life. Again, if you're set up on paperless contracting, we can get that completed for you. If you have any questions, now would be the time to ask them. Otherwise, everyone will receive a recorded version of this. We'll email that out to you later on this afternoon, so you will have that. And then I'll personally contact each and every one of you, see what questions you have, run any quotes that you may need. Again, want to thank Gary so much for taking time. Can't stress enough, if you sell annuities, you need to be selling single premium life, and you need to be doing it with Baltimore Life. They're a great company. They're great not only on the new business side, but on the service side as well for when that policy is put in force. I hope everyone has just an amazing, safe, happy weekend. Again, thank you so much for attending. Gary, thank you for your time, and I hope everyone has a great weekend. Thank you again. Bye-bye.